The market is severely supply constrained, so that sort of environment doesn't set up too much risk with regards to major price corrections or declines in the future. And the lending, while it is enabling this strong retail surge, has actually been very conservative. We saw very wide yield spreads last year on auto loans, and we actually saw the smallest share of subprime. So lenders have been very conservative. They are starting to become more aggressive because of how strong loan performance has been and how strong vehicle values have been. But we certainly are not seeing lending that in any way would cause you alarm.
Jonathan, what happens to car sellers, dealers, whatever you want to say, brands who simply can't get their product to market for the consumer right now?
They lose share. And that is definitely a differentiator that's explaining which dealerships, which manufacturers are participating the most in this incredible spring that we've had thus far. So on the new manufacturer side, we're seeing Toyota gain more than a full percentage point in share. We've seen Honda and Hyundai perform similarly. And what do they all have in common? They had more of the supply of more affordably priced vehicles that weren't selling well last year, but now that you're seeing lending loosen up, they are able to deliver those vehicles. Then you also see electric vehicles hot. You know, the prior segment is absolutely true, but a lot of those vehicles are about vehicles that are coming in the future. And of course, they're loaded with semiconductors, so that actually may delay a little bit of the near term. And then the used market has been incredible. And so those who are focused on the used market, be it Carvana, CarMax, the larger dealership groups like AutoNation, they all have been thriving as a result.
And Phil, how long should we expect this to last? Because if you say it's correlated to the housing market, that might be a multi-year cycle because people continue to try to, move to those locations where they can't currently get a house. But if it's more like what's happened with Clorox wipes or even to some extent, bicycles.
It's going for a while, Kelly.
Yeah.
It's going for a while.
You see where I'm going with this.
We're early on in this. You've got a couple of things. As Jonathan mentioned, you've got a really tight supply right now. You've got an economy that appears to be strengthening. The expectation is that the unemployment rate will drop a little bit more as we go further into the year. All of that is good for the auto industry in terms of sales. So I think that this goes at least through the end of this year and then well into next year.
Crazy. Jonathan, I see here you're a DJ on the side and you always have a song list for what's happening in the economy. So ahead of our grilling out this weekend, what are you listening to? What's the pulse of the moment?
Well, I'm looking for everything that's talking about up or higher and higher. So the classic higher and higher is a perfect groove for a Memorial Day weekend.
All right. I guess if it's true for the auto market, maybe it's true for the whole economy. It's just not on the prices side, okay? We want to boom. We don't want the inflationary kind.
Shepard Smith here. Thanks for watching CNBC on YouTube.